Man. All right, ladies and gentlemen, boys and girls, here we go. All right. Let's get to it. Can y'all see my screen? Yeah.
Yeah, we can see it.
All right. Yeah. All right, here we go. This is the NASDAQ, baby. This is what I look. I converted fully to the NASDAQ. I still play with the ES here and there, but I'm solely
No, hold on. When you say converted, like what percentage of your plays you taking on Nasdaq over the ES?
100%.
Oh yeah, you all right? Boy's a believer, all right?
100%. The NASDAQ just cleaner.
Yes, sir.
All right. So let's start at the weekly. Start top down. The month is started, so you know how that go. We don't have enough information on the monthly just yet. But we could go look at it right quick. It's not gonna hurt. It's not gonna hurt. I mean, I don't have to clean it up a little bit. All right. So from a monthly perspective, being that we just started this month, you got your buy side liquidity up here. At last month's high, that could be the price target. Also, the all-time high up here, right? We don't take no trades based off the monthly, right? We just look at it for direction and overall clarity, right? So overall we got we got buy side liquidity here. We got sell side here. We got we got relative equal lows on the monthly. That's nice. I like that. I like that. Okay. But yeah, so your sell side's down here. Uh, you got minor sell side here, but we're gonna get into the smaller time frames and kind of bust this down right quick. Let's go to the weekly. So last week, I was more so on the market being a little bearish going into the week. We had non-farm payroll Friday. Normally when we have non-farm payroll, the market kind of trades a little weird, especially going into non-farm payroll, like later on in the week, like especially kind of like Wednesday. So from like maybe Wednesday afternoon session, all the way up to non-farm payroll, the market gonna be looking to snatch your soul. You know what I'm saying? So if you're not really looking, and I'm just speaking for futures traders right now. So if you're not really kind of like confident in what you're doing, I suggest on those days you kind of like just chill. I lost enough money for everybody in here. Trust me. So from a weekly perspective, um, we got buy side liquidity. We also have this gap we tapped into it last week. Um, that was my reason for us being kind of bearish, but not last week, week before last. We tapped into it, so that's why I said going into the week, I expected lower prices, and we did kind of get lower prices, and we kind of traded higher going into the end of the week, which is cool to be expected. But we tapped into this gap, um, kind of sold off a little bit, like I said, kind of bounced back. So we got this sell side, we got buy side liquidity here. We got internal liquidity here. We got sell buy side up here, right? Then you have your sell side down here at this low, and then you have really my ultimate price target down here at this low, this sticking out like a sore thumb by itself, right? So from a weekly perspective, we had this weekly gap that we traded into last week, kind of got up out of there. That tells me that the market could continue higher and take out this high that's inside of this gap, which in my opinion, is that's a bearish sign when you have a swing high that's inside of a fair value gap. That's to me that's a sign to get short. But we'll see as the week progresses going into the week. I don't know what news we got this week. I don't. Do we have FOMC this week? I think we do. But I'm gonna leave that to Maul. Maul, the news guy. I'm gonna let him go on Forest Factory and tell us what we got. But going into the week, this is, we trade into this gap. This gap could take us higher to this high and beyond if it wanted to. But this is the weekly. We don't take trades on the weekly. We use the weekly for direction. So let's go down to our daily. The daily was telling the story. Let's see what the daily telling us. All right. So this blue box I have here, this is a weekly gap. Let me squeeze my screen a little bit so we can get more information. All right. So this was a weekly gap. We traded into that weekly gap last week, respected it. The wicks did the damage, the bodies told the story. Each body closed above the gap. So that just lets me know that we're not truly ready to sell. We wasn't ready to come down to this gap that's in discount. This was my overall price target. Last week I wanted to see the market trade into this gap, it didn't. Okay, fine. All right, no problem. So now the weekly gap was used as support, right? Bodies closing outside of the gap. We got in there real good. So you can kind of say it got filled and retraced. Now it's probably heading to this buy side up here, to this high, which is what 205.38 double, which is also inside of a daily gap. That's sign of weakness to me. That's a sign of weakness. That's a sign of that's a sell signal to me, in my opinion. But we'll see as the week goes in. But from a daily standpoint, like I said earlier, I wanted to see the market trade to this gap that was in discount, and it didn't. So now I'm assuming that the market wants to trade higher. With that being said, though, from a daily perspective, I don't really have like a go-to trade on the daily, but I guess once we go down to the lower time frames, we could kind of like plot out something that we're looking for going into the week. That way we could see, okay, all right, so once this happens, then I'll be expecting this to happen, and that could be your trade, or whatever, however you trade. Everybody trades different, but I'm just here to give perspective, right? So if we go down to a lower time frame, let's go to the, what's this, the daily? Let's go to the 4 hour. Load up, load up, load up. All right. So on the 4 hour, we had this inefficiency right here, which is a gap. Let me draw it out right quick. Draw it out right quick so y'all can see it. All right. The gap was filled with this wick. Gap was retraced. So this gap is null and void now, right? I wouldn't say that just yet, but so we had this order block on top of this gap. As you can see, it's being respected. Now, being that we closed back inside of this gap, I'm expecting higher prices. Now, from a 4 hour perspective, it looks a little different from the daily, right? So from a 4 hour perspective, you got a high here, and you have a high. You got a swing high here, right? There we go. So the market, in my opinion, could be looking to attack this liquidity up here, and overall, probably the all-time high eventually up here, right? So from a 4 hour perspective, you got this liquidity down here that we swept this low. And if you remember from the Zoom that we had last week, this was like one of my price targets, this low. This low, and then I had it. My overall was it coming down here, but that never happened, and that's all right. That's cool. The market had other plans. So now my bias has shifted to the market going to the upside, and it's showing you, and this is why. This is why I had that paradigm shift. Is because when we swept this low right here, and we kind of consolidated, and then once non-farm payroll came out Friday, we kind of took that news or that opportunity to trade higher. Did we trade outside of the range? No, we still inside of the range, but you got buy side liquidity here and here. So that's what the market could be trying to attack. So going into the week, I'm overall thinking that either the market can kind of like retrace a little bit down to the top of this consolidation before moving higher. But overall, I think the market is going higher to get liquidity out of the market, buy side at these highs and this high from a 4-hour perspective. If anybody else sees something that they want to bring to my attention or something that they like or they have a question about, feel free to say something before, because I'm just going through the time frames right now. All right. On the 1 hour, it's a little bit clearer, right? So on the 1 hour, my bread and butter right here, the 1 hour. So all this right here.
Sorry.
All right. So all this right here on the 1 hour, that's consolidation. Like this is consolidation. So this, like, trading this is not the easiest thing to do. You really gotta, know what you're looking for, get in and get out, because there's no true direction in consolidation. It's just playing ping pong, back and forth, back and forth, back and forth, back and forth. And if you're comfortable trading like smaller time frames, like the 1 minute or the 30-second or whatever the case is, if you're comfortable trading that, then you could find trades inside of this kind of consolidation. This really don't be my cup of tea. I like when the market is expanding and giving, context clues of what it's trying to do. So with that being said, we had this consolidation, but most of last week, then we had this consolidation the week previous. So it's like we just playing ping pong, kind of like between consolidations. You see that? So like from a 1 hour perspective, we really don't have like a nice setup going into the week. Like you're gonna have to wait for the market to give you more information. But from the higher time frames, like the daily and the 4 hour, it says upside, right? So, but when the market opens tonight at what 5 o'clock, we're gonna see, what it wants to do going into the week. Because like right now, I don't have like a go-to trade just looking at the information that I have in front of me. See what I'm saying? So even with this, like, so let's just concentrate on this right quick. So even with this right here, and this is 1 hour gap, this blue box is a 1 hour gap. So even with this candle, this was the news candle, just non-farm payroll, right? So we filled the gap. The very next candle, we wicked up and sold off, right? We sold off, but it was no continuation. So we sold off. You could say, well, we sold off to this order block, use the order block to go higher. That's cool. But it's still like when the market don't have like fair value gaps, like when the market don't have gaps, it's showing you no indication of direction. No indication of direction. So even with this gap, it shows you indication of direction. Like we wanted to get to the downside expediently, and that's what we did. We left a gap. Then we traded back into the gap, kind of sold off a little bit lower, traded back into it again and sold off a little bit, but it didn't displace outside of the range. It just kept consolidating. So that's a telltale sign to you to be like, all right, well, when we consolidating like this, it's not wise for me to trade, or if I am trading, I'm using less capital, or I'm trading the minis just to be sure that I don't get cooked. You know what I'm saying? Like, because especially when you trade the NASDAQ, the NASDAQ moves much faster than the ES. So like, you know, because even when you trade, for instance, if you trade one contract, and I've experienced this, you trade one contract on the NASDAQ and you get into your trade, and then as soon as you get in your trade, you up $105. And then, you know what I'm saying? And then it'll go down to down 60, and then down 90, then up 150, then up 200. So it's like when you trade the NASDAQ as opposed to trading the ES, because you get into a trade on the ES and then you'll be up 37.50, then you'd be down to 12, down negative 12.50. So it moves different. Like the aggression in the NASDAQ and the ES is two different things. But I will say the NASDAQ does trade a lot cleaner than the ES in a lot of ways. And it gives me, you know, more reason to be like, all right, let me take this trade on the NASDAQ as opposed to the ES, because the ES be acting like it's retarded sometimes. Let me see, we did leave this gap right here. All right. But like I said, when the market doesn't give you like fair value gaps, and then when it does give you a fair value gap, like inside of the consolidation, it just wicks through it, like this one, it wicks through it, and it is like it's not really like a response that you would like. It's trading ugly. Like so, even like, man, look, this is an order block, I'm gonna sell it. Then you take your trade and it wick all the way up here, and it take you out your trade, and then it sell off. See, that's when the market is manipulating. So you got to be able to realize when the market is manipulating and when the market is trying to deliver price. When the market is trying to deliver, when the market is trying to get somewhere, and when the market is consolidating like it is like this, it's not easy to trade this. And I'm sure like whoever traded last week, they probably had some stories about trading and they got, you know, manipulated, or they was in the right trade, but the market took them out their trade. Whatever the case happened, when the market is manipulating like this is not easy price action to trade for nobody. The most experienced trader or the newest trader, is just not easy to trade. It's easy to trade when the market is it has a direction, it's moving. Like, you know, it's like, all right, cool. We know what we're doing. The market's going higher. So, but I ain't gonna hold you. The market been kind of consolidating for a long time, if I'm being honest. But like, you know, it's easier to trade certain things when the market gives direction. When you have displacement gaps like such, it's easier to trade. But when we consolidating, is, you know, it's safer just to kind of like read the market and, you know, take trades in sim, just to stay in rhythm of what's going on without losing your capital or even losing your mental capital as well. But last week did give some good opportunities to trade. Monday, I think I had a good trading day Monday, Tuesday. I took a trade Friday too, but like Wednesday and Thursday, I didn't trade. I was kind of like you know, seeing how the market was trading. I was like, I didn't want to stress myself out trying to find a trade in this trash, you know. But let's go down to the 5 minute. See this? This is
Oh, Mike. Come
what you
back,
got,
Mike.
brother?
Hey, brother, man. Are you going to uh go to the ES?
Yeah, I'll go to the ES
Okay.
after I finish the NASDAQ for sure. I'll go to it. But like so,
They
for
talking, they
instance,
saying first you left options, then you left the ES. So people like he's always leaving us. I don't want you to
bro, I know. Listen, I know when to go, brother.
let me just say, bro.
I know when to
Don't
go, brother.
don't do that.
I know when to leave. I
I
don't
mean,
overstay my welcome.
it's
So
like English terms in Eastover though. You still going you good. They both good. ES and NQ are good.
yeah,
Don't leave them out how you left the hood. Just go to
uh,
ES, bro.
I'm gonna take those. I'm gonna take that. I'm gonna take that. I'm gonna take that like a grain of salt. But so Friday, so this was the price action Friday. Starting with London, right? So So we had a high impact news Friday, non-farm payroll. So when we have non-farm payroll, you can expect the market to trade kind of crazy. So this was the London session right here. And then out of London, we kind of expanded higher. We consolidated. And then let me make these candles a little bigger. So we consolidated here. And then once the news came at 7:30, we expanded to the upside. I wasn't really interested in this move to the upside. To be honest with y'all, I'm full disclosure. I wasn't supposed to trade Friday. I had already told myself, Mike, you're not trading Friday. But you sit here long enough, you're gonna take a trade. But anywho, so I wasn't interested in this move to the upside. Off a non-farm payroll. I was more so looking to see what we were gonna do with this 1 hour gap right here. So when we filled this gap, my Roche antennas went up. So from a 5-minute perspective, we filled the gap, and then with this candle right here, we kind of swept this high and filling the gap at the same time. So I was saying to myself, I was like, I want to see a kind of a strong move to the downside before, or not a strong move to the downside, but either a fair value gap given to me or an order block showing that the market wants to trade lower. And once I saw that, once I got that confirmation with this order block right here, this green candle, once I got that confirmation, I entered my trade, right? So you had your order block, market, this candle closed beneath it. Very next candle traded into it right here. I enter my trade here, took a little heat, but overall, the market did what I thought it was going to do. So my my fellow ICTers in here, they know what was inside of here. So you had your opening range gap, right? So you had your opening range gap from yesterday's close to previous day to the next day's open, right? So 50% of that gap was up in here somewhere. So that was my price target. And it was also the gap that started the news run. So I was like, all right, well, I'm getting out here. I think I was like 2011 or something like that in that area. But normally I'd be like, I'm taking it to these lows because I'm always looking for lows to attack, looking for a swing low to attack. Come on, nigga. But I was like, look, I'm just gonna take it here because I'm not supposed to be taking this trade anyway because I kind of broke my own rules. But when the market presents an opportunity for you to trade, to take a trade, whether because I like to trade liquidity sweeps, reversal. If you give me a gap or order block, give me an order block. I took the order block down, and that was it. One contract. So when on non-farm payroll, it's easier to trade after the news if you confident in your trade or you see something that you want to trade. Before the news, I advise you to not trade. Even during the news, like when the news happens, any news that affects the market like that, like non-farm payroll, FOMC, what's another one that really affect the market? Y'all know the red folders. So when you have that kind of news, you want to kind of stay away from it. You want to wait for the market to show its hand, what it's trying to do. And once the market started showing weakness up here, it kind of also made me kind of like want to pay attention to what was going to happen. Right. So I was like, all right, well, either you're going to give me a gap or order block to trade on the 5-minute. Now, if you go to a smaller time frame, like, I don't know, let's go to the 1 minute. You go to a smaller time frame, the trade's a little different. So this is the same setup, right? From a 1 minute perspective. So the 1 hour gap fill, same thing happened. We swept a high, we moved to the downside, kind of manipulated a little bit. The big thing to me was honestly closing below this kind of like consolidation on the 1 minute. Now, I'm not saying I be on a 1 minute. I'm not saying that I don't be on a 1 minute. I'm not saying I do be on a 1 minute. I'm just saying from a 1 minute perspective, this is what happened, right? So the context clues are like this. So you got your high, we swept the high and moved lower, closed beneath the consolidation. So let me make these candles a little bigger so we can see. Closed beneath the consolidation, traded back to the consolidation, right? But also there's a small gap here, right? So that just lets me know, okay, we're respecting the gap. Okay, we trade lower. So now I'm looking at it from, okay, we trade lower, trade back to this order block, we're respecting it. That's a sign of weakness. Can't get it back above it. It's a sign of weakness from a 1 minute perspective. Now, if you trade the 1 minute, hey, more power to you. I'm not a 1 minute trader, but just from a 1 minute perspective, this is what you'll get. Like you get more candles, you know, to give you direction of what you're trying to do in the market. So once you see that, okay, high swept, fell, you got a failure swing, another failure swing, another failure swing. It's weak. It's weak. It's weak. So eventually it's gonna fall. Now, I'm not saying you should trade the 1 minute. I'm just saying from a 1 minute perspective, this is what you could have traded. For me, I'm on a 5 minute. I'm a 5 minute person. I try not to go lower than the 3 minute. Sometimes I go to the 2 minute, but all I needed to see was an order block get created. And once we trade it back to the order block, that's what I was looking for to go lower. But for me, trading on a smaller time frame is you're always looking for liquidity to be swept in a strong move in the opposite direction, a displacement or some aggression to the other side, whether it's buy side liquidity getting swept or is it sell side? Whether it's sell side liquidity getting swept or buy side getting swept, and you want a strong move in the opposite direction. But see, this for me, guys, this was like a telltale sign. This is weakness because let's use our context clues. Look how small these candles are right down here. Right. So the market is like, all right, we playing pity pad, we're gonna chill, news coming, right? News comes, look how big these candles are. Right? Look how big these candles are. Then when we get to the top of this 1 hour gap, now we start playing pity pad. And then we set a high inside the gap. And then once we close this candle, the very next candle, we open up, sweep that high, and we start moving lower. Now, this candle, it wasn't an aggressive move to the downside. So in this instance, you got to use your patience. You got to use your patience. And then when the market opened up and it didn't attack this high and it kept trading lower, I was like, all right, I need an order block. I need an order block. And once the market give me either a gap or order block, I use that as entry to trade to the downside. Because this was manipulation, if you ask me. So you got your consolidation, you got your manipulation, you got your reversal, right? So the market traded down here. It didn't want to go any lower for whatever reason, probably because of the weekly gap that we traded into and used that support the whole week, right? So it swept this low and it just traded higher. You know, even traded back into the gap that started to sell. It gave you a little reaction to it, but it didn't give you what you wanted. Because if you trade back into this gap, I want you to, you know, continue to the downside, but that didn't happen. So we kind of consolidated, played ping pong the rest of the day and grinded higher to close the day. This is the type of price action I do not like to be a part of. This is the type of price action I like to be a part of. When the market is moving with intention. See, when the market is just grinding to the upside, I don't like my nerves too bad for all that. I need the market to move with intention and give me, you know, show me what you're trying to do so I could join the party. Right. So that was just from Friday's price action, the perspective of what I saw in the market as far as trading goes. The previous days, this was Thursday. I didn't take no trades Thursday. This price action was a little janky. I didn't like it, even though we opened up. We opened up the day with a gap, and we traded back into that gap and went higher. I still wasn't feeling it, to be honest. And then Wednesday, Wednesday's price action it was a dud in my opinion. Now you can probably find some trades in this and be like, all right, well, I was profitable Wednesday and Thursday, and that's cool. But like from my experience, I'm like, when I trade, like when we got high impact news at the end of the week, the market gonna trade weird. It's gonna trade weird, and it's gonna be hard to trade it. It's gonna be hard to trade it, and even trades that you would normally take that normally work for you is it's gonna stress you out because then you're gonna start feeling like, well, my trades don't work or this or that, and it's gonna start eating at you mentally. Be like, well, but you also gotta keep in consideration that we have high impact. When you have high impact news, the market gonna trade funny. You know what I'm saying? So let me go back to the 4 hour. Just referring back to what we talked about on the Zoom last week, right? So last week we spoke about the market trading lower to take out this low and to take out this low, right? So overall, last week I should have stopped trading. I'm sorry. Hold up. Matter of fact, what? Hold up. Let me remove that. So overall, once this low, pressing too many buttons over here. My bad. Once this low got taken out, right here, this swing low got taken out, I should have been done with the market. And I think this happened Monday or Tuesday. This low got taken out. Because remember, if y'all remember when we was on Zoom last week, I was like, this is my price target going into the week, even though I wanted it to trade down to that gap, that daily gap that's in discount. So that didn't happen. So by that not happening, and we took this liquidity and kind of consolidated the move high, and then moved higher, I'm under the assumption that the market wants higher prices. So even with that being said, we got this 4 hour, we filled and retraced this 4 hour gap, but we still closed inside of it. And then we have these highs up here that's inside of this 4 hour gap that still hasn't been filled. And then overall, we have the all-time high that's up here, right? So the market could be looking to attack that. I'll be looking for a retracement first down to the consolidation again before we move higher. But if that don't happen, I'm still thinking that the market wants to go higher this week. But let's go to the ES right quick. Got any questions about the NASDAQ though before I go to the ES? Nope. All right, cool. So the ES is kind of so the ES is a little different from the NASDAQ. So the ES is trading at or near the all-time high. This is the all-time high right here. So we set a new one right here. What's this number? 5830. It's a new one right here. And we kind of just been consolidating, playing pity pat. Let me go to the higher time frame right quick. This is a deal. Let me go to the weekly and see what's on the weekly. Yeah, same thing. So I'm under the impression that the ES wants to trade higher as well. We traded into this weekly gap. So we got to take the internal liquidity, external. The only thing left external is this high at 5830. The market could displace and keep going higher. That's what I'm assuming is going to happen going into the week. But from a weekly perspective, the next price target is this swing high at 5830, and it's probably going to continue to trade higher from the weekly and the daily perspective. Now, the daily didn't really give you like anything to trade per se. It's just like a consolidation happening on the daily. It's kind of like the lack of direction on the daily, but the weekly says to the upside. So I'm assuming that, we're going to take this high out. And once we take this high out, I want to see how the market responds to it. Do we displace above it and keep going and create a daily gap and trade higher? Or do we just kind of trade to it and kind of play pity pat we'll see. That's yet to be seen going into the week. But based on the information that I have right now, I don't know exactly what the ES is trying to do. I think I'm under the impression that it wants to go higher. It's bullish. But like when the market is trading at or near all-time highs, it's gonna be janky. It's gonna trade a little weird. It's gonna act a little funny. So all right, this is the 4-hour ES. Notice I don't have anything marked up on this chart because I don't live here no more. But we can mark it up as we talk and go through it. We had this 4-hour gap, same as the NASDAQ, 4-hour gap, filled it, retraced it, kind of closed back into it. I think once we invert this gap, I think I'm gonna have a better idea of what we're doing. Like if we invert this 4-hour gap and then use this gap as support to the upside, then I'll be like, all right, it's time to go to the upside. But all in all, bro, it's the same as the NASDAQ. Because we got this consolidation down here. This was the price target on the NASDAQ. I mean on the ES, the swing low right here. This 4-hour low, which we took out. Looks like, was it Monday? Yeah, we took this out either Monday or Tuesday, just like on the NASDAQ. This was my overall price target. This is like that was the last line of defense going into the week outside of that gap that I spoke to you about that was in the discount of the range, the daily range on the NASDAQ. I don't believe we have that same gap on the ES. No, we already traded into it. So, with that being said, once we invert this gap, use it as support to go higher, I'll be interested in taking the market higher from a lower time frame perspective, of course. But 1 hour, 4-hour, even daily, we use that as direction, and we use the smaller time frames for our trades, of course. But just looking at the information that I have in front of me right now, I'd just be looking for a closure above the bottom of the top of this gap right here. I'd be looking for a closure, and I'll retest at the top of this gap or even constant current encroachment of this gap to go higher. But I'll be looking to find that trade on a smaller time frame, of course. But the overall sentiment is to the upside, just like it is on the NASDAQ, in my opinion. And this is what I've been talking about, the difference between the ES and the NASDAQ. So the NASDAQ filled this gap. The ES didn't. So in my opinion, the ES is a lot cleaner. I mean, the NASDAQ is a lot cleaner than the ES. So we had this opportunity to fill this gap and then retrace it, but the ES is traded into it and sold off and traded down to this consolidation and use this consolidation as support to go higher. But it's much cleaner on the NASDAQ, in my opinion. But so with that being said, this gap still hasn't been conquered. Chill out. This gap still hasn't been conquered, so it's still on the board. So it's still on the board. So I don't know exactly what the ES is trying to do with this, but I say this is like the same as the 4-hour. Once we invert this gap and use it as support, meaning once we close above this gap, a strong close above this gap, and then we use the top of this gap as support, an even constant current encroachment of this gap, which is 50% as support to go higher, then I'll be interested in trading the NASDAQ, not the ES. But I'll be interested in looking at, the price action to find a trade to the upside to see exactly, what's going on. But I'll say this, I believe that the reason why the NASDAQ is trading a little bit cleaner than the ES is because the ES is at all-time highs. And when you're at all-time highs, the market gonna trade weird. Like the ES, that's why the ES has been trading a little kind of like fishy. But the NASDAQ not there yet. You know what I'm saying? The NASDAQ, the all-time high is up here. So it's like you got more room to kind of trade and, you know, take out highs and stuff like that. You know, it's a lot cleaner on the NASDAQ than it is the ES. But let's go back to the ES. So I believe once we close above this gap and use it as support to take it higher, then I'll be interested in taking it higher. But you know, once we get past the all-time high, you'll have to use the fib extensions and stuff like that. And I'm not really interested in doing all that. Like, I just want to use the information that's in front of me. So once we start trading above all-time highs and setting new highs and higher highs and all that, I just wait for the market to retrace for me to be like, all right, let me get back into the market and see what's going on so I could, you know, start trading again. Because like when the market is trading beyond all-time highs, you really don't have no data to go by. You don't have like no perspective outside of just trading fib levels. And I don't like to just trade fib levels. I like to, you know, have a good feel of what the market is doing before I enter the market to take a trade. And when we at all-time highs, this is the type of price action you're gonna get. Like, this is the type of stuff that's gonna happen. You're gonna just play ping pong all day. Then you're gonna manipulate you, have you think we about to start selling, and then trade right back into the range. And then once you trade right back into the range, you can expect the market to trade higher. Anytime you see a long wick like this, expect higher prices. Anytime you see, like, even right here, market manipulates you into thinking, oh, we about to start selling, and then we trade right back into the range, expect higher prices. And vice versa. If it happens on the other side of the market start running and then you have a long wick, expect lower prices. These are like the context clues of the market. The market give you context clues of what it's trying to do. Even here, boom, long wick. Oh, we about to start selling, and then the market start trading higher, back into the range. Expect higher prices. Always expect higher prices when the market has an aggressive move to the downside, especially when it's like, so for instance, especially like if it's early in the candle, like, so as I say, this candle opened at 9 o'clock, or it opened at 8 o'clock. This candle opened at 8 o'clock and it starts selling. Boom, it's dropping. And then like towards 8:30, 8:45, it's trading higher and it closed right back into the range. Expect higher prices. Expect higher prices. This is manipulation. Even though we swept these lows, but this is manipulation. This is how the market manipulates you. Because you think, okay, well, you'll look at it like this. This is just an example. So you could say, okay, this is a support level right here, right? So this candle, we broke support. We closed beneath the support. So when you break support, you expect a retracement back higher, and then the market is trading right back beneath the low. You're like, oh, we bearish, we about to start selling, and then people get into sales, and then we manipulate you into thinking that we're going lower. But all we doing is sweeping liquidity. That's all we doing. But you look at this as a level, like, oh, this is a level, this is a support level. Look where the body's at on these candles. That's support. Look at these wicks under that's support. And then we trade back to support. I'm buying this. So you could be like, all right, I'm buying this. You could be like, I'm buying this. Then you buy it. And then look what happened. Get you straight up out of there. And then once to get you out of here, you be like, all right, I'm selling this. And then we get you right back out of there again with this candle. This is how the market manipulates. And I just want to, you know, show y'all in real time. Well, not real time, but this is how the market manipulates you. Like, if you don't have no overall direction of what you're trying to do, if the market ain't giving you what you're trying to see, it's gonna manipulate you. Your eyes gonna start playing tricks on you. You're like, oh yeah, we about to start selling, because this candle was extremely red. It was way down here. But, oh yeah, we about to sell. So you got those people, including who it used to be Mike. Press the button. All right, we selling. Press the button. Sell. And then the market, all of a sudden, it just starts running back into the range. And then the very next candle opened up here, kind of sell off a little bit and then take off to the upside. That's manipulation. But when you're looking at it from like a different perspective, I'm not gonna say no names, but you know, you trade levels, right? So you're looking at this level as support. You're looking at this level as support. Look, we bounced off it. Boom, we trade higher. We bounced off it. We traded high. Oh, look, we came almost down to it. Then we traded high. Then look what we did here. We trade high. So next time it come here, I'm buying this, and you buy it. You put your stop loss here, right? And you trade higher, and you're like, all right, cool. I'm taking it all the way up here. And then look what happened. You get a dookie drop. And then take you out your trade. And then once you see this candle, how aggressive this candle is trading to the downside, now you want to hit the sell button. And then it manipulate you again. And then you go that day, you go from being up $900 to down to $1,500 in the blink of an eye. You don't even know what happened. You got manipulated. This is how the market, the market, that's how the market makes its money, by manipulation. I'm gonna manipulate you into thinking that I'm doing something that I'm not doing. Kind of like your children, right? Well, maybe just mine. But they manipulate you. But like, Daddy, I clean my room. Can I go outside? Cool. You go check the room. You peep your head in the room. But oh, it's clean. Cool. Y'all go outside. But then when you go in the room, everything under the bed in the closet. Like, oh, room ain't clean. You know what I'm saying? So that's the manipulation factor. So when you don't know exactly what you're looking for in the market, that's what's gonna happen to you every time, right? If you don't know how to spot in certain things, like this manipulation, or if you don't know you don't know what a volume imbalance is, or price inefficiency, you don't know what your swing highs or your swing lows. If you don't know what you're looking at in the market, it's bound to happen to you. And I'm a witness. It happened to me. I used to be see when I see a candle dropping like that, boy, I used to be pressing that button. Sell, 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 sell. And then I'm pressing sell way down here because I don't believe it yet. So once I see it way down here, I'm pressing sell, boom. And I get in, I'm like, oh yeah, I'm up $400. And I go get some water, and then I'm down 250. I'm like, oh, what happened? And then it keep trading higher and higher. But that's because you don't know. Or you just trying to, make money right quick instead of taking the trade that you're supposed to be trading. But when you have a lot of consolidation like this, you're gonna get manipulated. It's gonna be a lot of manipulation happening because you're gonna think, even right here, you probably thinking the market about to sell off, then it trades right back into the range. Even with this candle that happened Friday, you're like, oh yeah, we about to start selling. But if you don't know what you're looking at, it's a consolidation. This is an order block right here. Try to trace it. So I'm gonna see what happens. It's like this is the gift of patience, right? So all right, you can be like, all right, I'm gonna see what happens when we trade to this order block, right? So you can see the market kind of respond off this order block. All right, cool. So now inside of this wick, inside of this 1 hour wick, there gotta be some kind of gap, a 5-minute gap, 3-minute gap, something inside of this wick that's gonna make the market trade back to it and then trade higher, right? And let me see. Let's just go to the 5-minute and see. Matter of fact. Don't do that. Don't do that. Man. Taking longer than it need to. Just want to draw a box right here. So let's go down to the smaller time frame and see what we got down there. Oh, so this is it right here. So, all right. So this is the wick. This is the first wick that traded down to that 1 hour order block, and then okay, so it left the order block down here. So normally it either be a gap or order block. This low got protected. So now this might not be your sauce. This might not even be your style. You might not be like, I don't trade order blocks. That's fine. But when the market does that, when it manipulates to the downside like this, when it manipulates to the downside, like on a higher time frame and trades higher, it's gonna leave breadcrumbs. It's gonna give you opportunity to join the market to the upside. It's gonna give you opportunity. Now, some people be like, man, I ain't trading no order block, and that's cool. Don't trade the order block. But if you go, let's see. If you go to a smaller time frame, maybe it's a gap on a smaller time frame. The 3 minute. Let's see. Load up. Oh, that's the same thing on the 3 minutes order block. But shit, it kind of manipulated them on here. But then so here's your reversal right here. Here's your gap, your 3 minute gap. Okay. But yep. So, you know, it's always, the market is always going to give you context clues. You just got to wait and let it play out. You know what I'm saying? And I'm from the thought process, like when I first started trading futures, like I used to, like the first trade I took on futures, I think I made like $162 and I was happy, but I didn't know what I was doing. So now it's like, what I'm learning about trading futures is the best trade that you're going to make in the day comes with patience. Like not trading the first thing you see, not trading what you think is going to happen, and not letting the setup happen first. It's just like you got to be patient and wait for your setup to present itself. And when the market manipulates to the downside like this and leaves wicks, these long wicks like this, is leaving context clues inside of these wicks. You just got to go find it on a smaller time frame. Because if you pay attention, even with this wick right here, right? And then we manipulate it to the downside, trade it back into the range and trade it higher. But even with this candle, we traded back into this wick. Something was inside of this wick on a smaller time frame, whether it be an order block, whether it be a gap, whatever it is, it traded back to it. It traded back to it here and here and got up out of there. So when the market, you got to be able to pay attention to the context clues, man. These are the context clues, the wicks, like, you know, market trade back into the wick. We call these volume imbalances or imbalances because they don't have a candle next to it, a body candle next to it. So even with that, Winston, that's your trade, right? So you gotta, it's the context clues are inside the wicks, inside of the wicks, like you inside of the, it's always something. So
Market
even
imbalance for the win.
yeah. So even when, you know, like I used to say before, like when you have a swing low like this sitting out like a sore thumb by itself, the market come and get that. It's come and get it. And it, look, Ken got this one, Ken got this one, Ken got this one. Look, when you sticking out like that, like a sore thumb, you know what I'm saying? Everybody got on a uniform, everybody got on uniform shoes, but you got on some all red G's. Boy, you going to get detention, brother. You're getting detention. You sticking out like a sore thumb right here. Boom, I'm coming to get you. You just got to know how to trade this. So just like right here with this manipulation right here, right? We took out this low. I'm sorry, we didn't take out this low. We took out these lows. So if you don't know that this is sell side liquidity, you thinking that the market going to keep going down. It's not. Once we sweep these lows in reverse and trade back into the range, it's going to trade higher. It's going to trade higher. But when you see a strong red candle trading to the downside, your first inclination is to sell it. But if you don't know that all we're doing is sweeping lows, you're going to think that hey, we about to start selling. But that's what patience and knowledge comes in, right? That keeps you from getting manipulated, right? So once you're able to realize or see what the manipulation is, you're not going to be as easy just to sit there and press the button. You're going to be patient and wait for your trade to set up. And I'm going to be honest with y'all. If you trade futures, everybody that trade futures in here, this is the secret sauce. The best time to trade futures is between 6 a.m. and 9:30 in the morning. Anything after that, is like especially if we have like 9 o'clock news or something like that, like, so any 10 o'clock, between 10 o'clock And going into the afternoon session, unless we have afternoon news like FOMC, anything like that, that's the best time to trade is like between 6 a.m., right? Like leaving out of London, going into the New York session. That's the best time to trade. Anything after that, unless the setup is kind of like immaculate, it's gonna probably end up being some type of manipulation. Because most times you're gonna get your distribution between like right before market open at 8:30. So like between 8 o'clock and 9:30, that's when you're gonna get your strongest moves in the market. Like even after a high impact news event, like non-farm payroll or CPI or something like that, even after that, after the CPI news and wall and the market and showed its hand of what it's trying to do, the best opportunity for you to trade is gonna probably be between in that 8 o'clock to 9:30 window. Let's say 10 o'clock. So between 8 and 10 a.m., that's gonna be your best opportunity to get in the market and get out unscathed. So that's just from my experience. Everybody have a different experience in trading futures, but just from my experience, I think that's the best. From 6, that's a sweet spot. 6 a.m. 10 between 6 and 10. That's a sweet spot. Now, if we got FOMC in the afternoon, then I'm not trading in the morning. I'm not trading in the morning unless it's like a real quick 10-point setup that's like perfect. I take it, but I'm not going to trade until after FOMC because the market going to manipulate and trade sideways that whole day until FOMC that afternoon. But with that being said, bullish, ES bullish. Be mindful that we are at the all-time highs, trading at or near all-time highs on an ES. But I'm still bullish going into the week. NASDAQ bullish going into the week. Price targets being these highs, 4-hour high here, and this high. We still have this gap up here that hasn't been filled, but we have these relative equal highs that's inside of that gap. I'm watching that to see how the market responds to it. But overall, I got the market going higher this week. Maybe a retracement first, then higher, but we'll see. But overall, price targets highs, these highs, especially this one. This one looks enticing, very enticing to me. Yeah. But then, then we have all this engineered liquidity down here, all these lows. Excuse me. We got all these lows down here, these lows. So we'll see how the market responds with liquidity that it wants to attack. And then I'll be more inclined to see what it does after, we attack some liquidity. Do we take these lows out and reverse and create an opportunity to trade lower? And I'll be looking to see how that happens. But overall, I still believe going into the week, starting the week, we should be a little bullish. So, any questions, comments, or concerns before we go to the hood where they do the most good? Bro, look at this.
Appreciate it, Sensei. Tasha.
My 5 minute. Look at my 5 minute on the ES, dog. Naked. Oh, we got action. All right. I'm converted. I'm converted. But yeah, man. So also while let me see. While you still here, Brian Day, gonna have an opening week gap. So be mindful of that going into the week.
And you still don't pay attention to the new day opens and new week opens?
No, that's what I'm saying. You have a new week opening gap.
Oh yeah.
The new day. Yeah, the new day is a nice trade. It's a nice
yes,
trade.
sir.
But yeah, so that's Winston. You ready?
Say, Mike, you matching like Lou?
Wait a
Hey, bro,
minute.
this is being recorded, brother.
Wait a minute.
Niggas throwing haymakers, brother. Oh,
God, here, you're a trouble starter.
and niggas won't even, bro. Niggas just
I
wait for a
made
nigga to stop
Mike.
talking.
Mike, I blame me. I made a mistake and I asked him to come. I said, the church been looking for you, brother. You know what I'm saying? And here we go.
Oh
That's a
man,
little
bro.
trouble starter up in here, y'all.
It was kind of quiet, bro. I just had to get some noise going.
That boy throwing rocks and hiding his hand. That's cold blooded. Hey, dog, I can't do that, bro. I'm
Hey,
not
we
as,
gotta
I'm not
stay
as,
here, D-boy.
So
You up?
we ain't got to touch on that. I was just messing with y'all, man.
I can't. I'm not as good as him, bro. I can't do that. Hey, Winston, you ready to go to the hood, bro?
You gotta start taking profit. That's your problem.
That's it. I be trying to stay.
Take me the hose, bro.
You ready, man? Just
Take
being
me the hose
recorded.
before I
This is
put
being
another
recorded.
charge on ball.
We blame this. See, bro. You know what? I'm tired of holding my tongue. No, I'm gonna see what I gotta see. It's Maul's fault because Maul knew about this, and Maul didn't tell us. As a matter of fact, Maul be giving him the plays from the Zooms, dog. That's how he's so profitable.
No comment, dog.
All right, that's yeah.
Yeah, I do feel that though.
Yeah.
It's
It makes
weird.
sense. When you connect the dots, 5 plus 5, it's gonna be 4. So when you connect the dots, brother,
Yeah, they
the
out there in
dots
Texas
connect.
doing shit, probably holding seminars and everything in Texas. All cooking for 'em. You heard me?
All these meats market. Look, this is my YouTube channel. That's not me talking,
That's me talking.
but
They
I
call
taught
me.
him
They
everything he
call me
knows.
Mike. my real name Mike. My mama
Keep
name
telling
Mike.
y'all, man, I am innocent, man. I am innocent. I ain't got nothing to do with what's going on, man.
That's me. I'll let y'all in. Yeah, I'll let y'all in. I'm gonna send y'all a link, yeah.
Yeah, leave. And then he sent a text to the group chat. Yeah, but they're gonna have some new people in the Zoom.
I'll tell you.
Man.
But yeah, hell, bro.
Go ahead, bro. Go ahead. I'm about to make you the host, dog.
All right.
Oh, that's wild. Y'all wild, bro.
Y'all can see my screen?
Oh man.
Y'all can see the screen?
Yeah, we can see it.
All right. On a daily, we're looking for a high to break. Hold on. So we can get that 585 we talking about. Y'all can see it's still trading between 61 and 78%. Kind of consolidating here. Downside is that we close below 565. So that's the range we've been doing for the past week. As far as days, we got what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. So damn near 2 weeks. We've been up here lollygagging. Yeah, about 2 weeks. Got it tested. They got a little small gap right here that it came into. The whole gap is still what we had 560 or something like that we were talking about. Not a fan of it no more. I do feel like we're gonna go higher just because we haven't went lower. That's all. But on a daily, if you could get a closure below 565, you start looking for the 550s and stuff like that. Then on a weekly, we want a closure below 565 for that same number.
Yes, sir.
550. All right, that's done with that. I put us in a bad play. Palantir not trading this shit no more. It's fucking trash. Palantir's at $40. Left a gap behind. So if it do come down here now, you're not looking for it to go down. You're looking for it to bounce off 35. Am I doing something wrong here, Mike? I'm doing wrong. Oh. Hold on. It's going. Going to test the high, y'all. So if it do give you an entry, your entry will be down here at 35. Then you'll be looking for like a 46. Trading this, I have to go with Ben said. This thing moves very slow. So you're gonna need time for that 46. But if you buy time, then 46 is gonna be the contract not gonna move because you bought 6 months for a stock to go up $6. You feel me? So
Man, but in defense of that, bro, we kind of said to get in at like $20 to $21. So so
it's gone.
it,
What up, bro?
so if you wanted it, you could have bought like some leaps. But I think Ben said the leaps won't even move neither though.
Yeah, if you buy it far out, you're not gonna go to like $60, $70. You see what I'm saying?
Yeah.
So it's kind of like you buy 45, but you're gonna try to do a 2-week joint. You kind of needed to make these big moves on one of those weekly contracts to actually see some money on it. So definitely, some stocks are not made to trade. This is probably one that you should have just got in.
Yeah, to buy
Like smart trade.
Yeah,
So
I feel you.
the researchers, like I said, Ben said it. I've witnessed it firsthand.
Oh yeah. You're right.
Apple consolidating. Gotta wait for a move on that Joker. Microsoft cool. Microsoft actually turned around, but same thing. Got this little areas consolidating in between 28 and 390. Well, 28 and 390. What's another one we're looking at? Tesla. Consolidation, man. Came up here, turned right back around. Got this what's our word for this, Mike? The word we using now? We ain't got nothing. It's just floating. Hello?
Is what you mean? What's the
They got
word?
it ain't got no wick or nothing. It's just
That right there?
Yeah.
Volume balance.
volume imbalance. Make sure my terms match up with this guy, since we don't have stop signs no more. That's all.
Hey, bro.
Hey, listen.
Don't
Listen.
do that, dog. Don't do that.
Go ahead and let the people know, bro.
All right. I'm gonna tell them at the end of the room.
All right. Mike got some news for y'all. Y'all gonna be real excited.
Not only am I matching it, go ahead.
That's it. Y'all got any stocks y'all need to look at, dog?
Man, look at SPX, dog.
SPX?
Yeah.
That been running too, man.
Mm.
I don't know if it's going way up there, man.
Man, bro.
I had to draw another joint. Hold on. Let's do that. I know Maul be out there. Him and his buddies.
Oh, shit,
Him and his brother.
He don't
Yeah,
say
him
nothing.
Him and his brother, yeah, they be out there trading SPX, all kind of other shit. KuCoin and fucking
Come on, man. Let's be
fucking
kind.
Dogecoin and
Let's
everything
be
else.
kind. Let's be kind today, bro.
Like 58.66. Hope y'all paid attention what I just did. I ain't doing it again. So yeah, same thing. You got a gap down here. That would be perfect entry. Then you'll play the retracement to go fill this gap and take this, bring it internal and take it external. There it is, Mike. See?
Woo, daddy.
See? There it is. Bang, 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 bang. Take this gap, internal liquidity, and bring it external. The external is 58.66. This is the third week, so you could see that move early, and then it take off right after it fell at 56.39, and then take off. Same thing with SPY, it'll be 560. Then it retraces it, you go run. If it fills here, just play it to the high, and then if it gives you the 7-8%, you already in the money.
You leave a runner. You can leave
yeah,
a runner.
leave a runner. Do two of them. Do three. So that's that. I'll give y'all the number on SPY again. Yeah, we could get that fill early, play it to the upside. This is the third week. Usually the gaps try to get filled. That's just been created, try to get filled on the third week. Like this one tried. 1, 2, 3. Didn't make it. Got up out of there. So we're looking for that fill. Let me go back to SPY right quick. I'm gonna get up out y'all here. Got a busy moment. Oh, SPY, same thing, looks the same. That gap fill is 563. Take 563, if it comes early, Monday, Tuesday, get your 570, what this is, I guess a 574. Really could do like a 570, keep it a buck. Do like a 570. That one should be cheap at if it go down to 563. It'll be $7 out the money. 1 week, Monday or Tuesday of next week. Give yourself some time. Buy 570 to 574. Entry is 563 to the upside. That's all I got, bro. Y'all good?
What you think about Microsoft?
We just looked at Microsoft. Are you hanging a wall right now?
My bad. I was driving.
Oh, all right.
Trying.
Man, come on, bro.
You driving to
Well,
Texas?
I mean, they pretty much like they pretty much run kind of like the ES though, huh?
No, they consolidating.
Yeah.
They'll make it if they run. The ES is gonna run, but if they trade sideways, then you got other stocks that's making it move. Microsoft is the biggest company, has the biggest market cap right now. But
I'm looking to jump back into something, but you
don't jump into Microsoft.
I'll fuck with them.
Don't jump into Microsoft.
I might just hold off until they're ready.
No, we told you what to do. Get pocket options.
Right?
Yeah, bro. I'm gonna go ahead and leave because I don't want to be.
You heard me?
I heard you.
Go to the other side and get your money matched, bro. Because we ain't doing that over here. That's it. Zoom over.
Hey, bro, this Zoom being recorded yet?
It's over.
Man,
I'm listening.
I do not want to be a part of this, bro.
I'm not gonna even say nothing else.
Yeah.
Hey, I've been out I've been out for like a year and a half.
This is gonna be the perfect
So
comeback for you.
I'm not gonna even say nothing. I'm just listening. I'm all ears.
Oh, you don't even you don't even know the backstory, huh?
Nah,
Oh man. You gotta fill him in, Winston.
I'm not doing that. I like his company. I don't want no tarnish on his company. Ball already jumping state to state. You hear me? That's enough. That's enough going on.
So that boy, the FBI knew everything.
Hold on, bro.
FBI knew everything.